is Equity News on Equity Access, your aerial perspective of stock market developments and of developments in the Zimbabwean economy. Thank you for joining us as we broadcast live from Hampton Studios in Harare. I'm Ibn Mabunda. Let's get started. The much anticipated interim budget set to be released by the finance minister has been postponed up until tomorrow. Of course, there's been that much anticipation, with the minister having promised to lift austerity measures that have affected production across the economy. Meanwhile, BNC has released a positive performance for the year ended 31 March 2019. Revenue scaling just 1% to $54 million against a prior year performance of 53.6 million United States dollars. Operating profit scaled 141% to $21.3 million US dollars compared to the prior year's performance of 8.9 million US dollars. Their profit after tax also scaled by 131%. One of the key issues discussed at the analyst briefing in the capital was an issue to do with a smelter that is still at 83% level of completion due to considerations by the leadership of the entity to keep it at its static position up until prices of nickel actually scale. Now let's just have a historical performance analysis to get perspective of where it is that Bindura is coming from, where it is, and right up to this point, as well as, of course, we'll have a look at the footage that we had in a discussion with the chief executive, BAT. Okay, just have to look at it. In the meantime, we'll have a look at the footage to look at a commentary of the results from BAT, who is the chief executive of the mining corporation. Let's have a look.
Bottom line, as you heard my finance guy talk to you, was we had, in terms of cost control, it was good. In terms of the change in currency, in the accounting thereof, we also benefited in terms of exchange control gains. We gained a lot of in terms of exchange control gains, and volume-wise, we were almost the same level last year, but price was higher by about 16% compared to the previous year. So that also contributed to the bottom line.
I realize. Now let's talk about your finance costs, which went up a good 222%. What was the contributing factor?
The main contributing factor to that was the way we're treating now the bond repayments. We were capitalizing that before, but now that is now current. We're now paying the interest rate for the bond. We're now putting in the expenses. That's what drove that percent.
Now on to the historical performance of how Bindura has operated over the past few years, moving from the full year of 2015 right up until 2019. 2015 profit after tax of $11.2 million, reporting a dip in 2016, 600,000, pretty much the same figure 2017, and since then there's been an upward trajectory in terms of their revenue, in terms of the profit after tax. 2018, $5.8 million US dollars. 2019, 31 March year end at 13.5 million United States dollars. Revenue almost a similar trajectory, dipping from 2015 at 78.9 million US dollars to 42.3. Then ever since, there's been an upward trend there right up to this particular point where we've actually reported a figure of $54 million, and that, of course, this has been their performance. And at this point, there's one operational mine, which is Trojan Mine. As we make progress, RBZ has issued a statement inviting registered commercial banks and building societies in Zimbabwe to subscribe to 91-day treasury bills amounting to 30 million Zimbabwean dollars. President MNANGAGWA has commissioned 47 buses today in the capital. According to government, the buses are a part of the 300 buses that the president had promised the country earlier in the year when combi fares were hiked due to an increase or a surge in the prices of fuel. The increase in the buses is expected to boost public transport and alleviate the transport burden in the country. As we make progress, Steward Bank has released its new bank charges and interest rate as of 31 July 2019. The personal current account monthly maintenance fee now stands at $10. Corporate account monthly maintenance fee is now at $50. Loans and overdrafts establishment stands at 3% maximum and interest rates up to 25% per year. HUWEI's half-year performance was up despite the trade war between China and the United States. The company reporting a 23.2% increase in revenue, coming in at 146 billion yuan. Telecom giant also reported a 24% increase in the smartphone sector as it managed to ship 118 million smartphones in the period. Thank you for watching. This concludes our evening news bulletin. Up next is a look at the news in the news review. Don't go anywhere.
Climbing to the top takes more than just hard work and smart choices. It's the passion that drives you from within, the endurance to keep going through difficult times, and having a very clear vision of how to succeed. That's what we strive for at CBZ. We're a diversified and innovative listed financial services group in Zimbabwe with a complete range of activities including banking, short and long-term insurance, asset management, and property investments. CBZ has been a pinnacle for stability in the economic landscape of Zimbabwe, stemming from our deep-rooted values, our excellent customer service delivery, and our corporate vision to strive for excellence as a global competitor. Our continuous investment in research and development will cement our promise to provide customer convenience utilizing state-of-the-art technology. Relationships are at the core of what we do. We understand, however, that strong, long-lasting partnerships are not built overnight. With over 3 decades of wealth management, we have come to understand our clients and their specific investment requirements. Our unique mix of skills ensures that investment opportunities are examined from all perspectives. The balancing rocks of Zimbabwe have weathered the elements for thousands of years and stood the test of time, like majestic reminders of the fine balance of nature. They challenge our perception of what is possible and what endures. Just as CBZ has weathered the economic storms and remained steadfast throughout the turbulence of unsettled economies. Achieving the impossible through resilience and stability, we balance the elements of hard work, dedication, and experience, making us your ideal partner for success.
Welcome back, viewers. It's now time for news review. Now with me for the discussion is Chief Analyst Respect Kwenzi. Respect, good evening and welcome to the show.
It's always my pleasure, Eben. Thank you.
Superb. Now, of interest here, of course, several developments that have taken place during the course of the day. But let's talk about RBZ having launched treasury bills to the tune of $30 million. What is the significance of that?
So these are being issued to test the market. As you would recall, in October of last year, a government undertook to scale back on its open market operations. That is its pursuit of private capital, or trying to solicit funds from commercial banks and such similar institutions as a way of trying to tame their fiscal deficit. So that exercise was, they highlighted that they're going to wound it up and of course try to rationalize how they borrow money from the public. So getting into 2019, they promised that we are going to create a market where we can use an auction system to try to value our TBs. And therefore, this is the initial rollout of that exercise. Previously, TBs had a flat coupon rate, which was 10% per annum or 5% biannual. And of course, that market was subject to a lot of investors were obviously taking advantage of such an arrangement, and government also felt that it was equally being shortchanged by such an arrangement. So obviously this undertaking to utilize an auction system is in the right direction. But I think more specifically looking at the quantum of the money that is involved, this is 30 million. If you look at what was borrowed in 2017, or maybe from the time of the new government up to December of 2018, that's TBs amounting to close to 2.8 to 3 billion thereabout. And so when you look at 30 million, that's just about 1% in terms of actual value. And if you want to look at the implication on money supply, I think it's quite insignificant at the present moment. And it was also important to establish a market-driven coupon rate, so to say. And I think government is in the right direction at the present moment. What's feared is once we have established a certain point or a certain rate that should be applied to treasury bills, or that is expected to come out of this whole yield curve, I think government would now undertake to see ways of funding what they're going to call, the fiscal deficit that's expected in this year. And if you look at the revised numbers, we're presently sitting at an estimated 12 billion in the revised budget. But I am of the thinking that that budget could be revised upwards, even up to 14 billion. And given that will raise about 10.5 in national revenues as at year end, it means the deficit levels will be above 3.5 billion thereabout, and that 3.5 billion should be funded somehow. So it definitely points to where government is going, is testing the market. It wants to establish a rate, and once everything is done, I'm sure we'll see a rollout of course, either way a deficit needs to be funded. That is, if it's created, and of course by tomorrow we'll know what kind of deficit levels we expecting as a country by year end. So I think this is the spirit, and this is the undertaking which government is committing itself to.
But what are you expecting from the budget tomorrow, or should I say, what can we expect from the budget?
I think I've already hinted some of my expectations. Primarily, I expect government to increase its budgeted level. Of course, 8 billion last year is no longer the same value as 8 billion this year, of course, due to the changes in the monetary currency that we're using, as well as the inflation implication. Inflation has risen by almost 200% year on year. Last year to this year, and when you're looking at the exchange rate, it is dampened by almost 900% thereabout. I think all these point to government having to relook at their numbers and address the issue of market viability. And in fact, there is a steep deficiencies in terms of demand in the economy at the present moment, and most people are finding it very difficult to get by. And of course, it has got a negative implication in terms of weighing down our expected GDP levels. So in the spirit of trying to maintain our austerity, there's also an implication of course, driving down the realized GDP at the end of the year. So there has to now be a fine balance or a fine tuning to try to accommodate or to try to address the recession that we already find ourselves in. So we might see a bit of stimulus measures that are put in place to try to redeem lost demand in the economy and to address affordability issues. Either government will have to increase its budgeted level. Of course, it's coming, but I think there will also be possibly a combination of trying to play around with the taxation as well. Maybe the 2% tax might be revised to some extent. But these are the broader expectations around the economy, that things cannot continue to go as they are. I'm sure if you listened to EcoKC yesterday, she highlighted that in as much as they are ready to face the challenges in Zimbabwe, still there has to be power for them to generate that kind of produce which can make them sustain the run in this difficult environment. And of course, again today, Michadei Masunda, the chairman of BNC, also highlighted you cannot maneuver if you don't have the factors of production for you to produce so as to survive in the game. So critically, there is need to relook at some of these key elements of the economy. There is need to find money to bail out to bail out ZESA. There is need for money to try to look at other aspects, such as how to support the agricultural sector, which is quite key in driving the economy of Zimbabwe. And there's a lot to do with trying to find a balance in terms of how for farmers to remain viable in their fields. So all these have to be addressed through the budget, and I think the budget will largely be of stimulus nature.
Interesting. Now let's talk about the commissioning of the 47 buses. A promise of 300 has been set, and now 47. A positive move in fulfilling that promise. Your comment?
I don't think I'm much worried about the shortfall from the target. At the end of the day, every entity is created to maximize profitability. But I think specifically the undertaking by ZUPCO is being driven by government presently. It's meant to subsidize the economy. So in essence, ZUPCO is not a for-profit entity at the current moment. But the broader spirit within the context of parastatals right now is that parastatals have to be realigned, parastatals have to operate profitably, and there has to be possibly private public partnerships so as to ensure that these entities do not keep on draining the fiscus. But we are at a juncture where there's definitely a need to balance different aspects of the economy. Whereas you find at the one end, we find ourselves in a situation where prices are rising and you're trying to control the implication of fuel, even on labor and so forth. And at the other hand, you also want to to allow market liberalization to take full effect. Trying to find a balance there is quite difficult. So what government is doing is trying to subsidize the hardships or trying to subsidize the situation, and this is what has led them to try to roll out this exercise. But I think we have seen it elsewhere. I think subsidies do exist elsewhere. It's about how you manage them. It's about the magnitude that you have budgeted to subsidize. If you go beyond your own means, it means you're simply creating another problem. Either you're creating a huge deficit levels when you're helping people get to their homes, with those marginal funds, you may be deferring a problem because you're creating a huge deficit for the parastate or for government eventually, and that will have to be incurred at a certain point in time. So I think deficits or subsidies in a way are created such that they create a balance to accord certain aspects of the economy to keep moving forward in a way that is quite sustainable. But sustainability is the missing point in this endeavor. I don't believe that what government is undertaking is quite sustainable.
Interesting. Now let's get into Bindura. They of course released their results. Their revenue pretty much static, just growing by a good 1%, and then of course their profit, which is actually scaled by about 131%. Let's talk about their performance over the period in question.
Okay, so if you look at how Bindura performed over the past 12 months, at the top line, we saw revenue going up by a marginal 1%. But revenue is a function of price and volume. When you're looking at the average prices of nickel, the obtaining prices which they realized were up about 16%, which is really a plus because nickel prices has underperformed to their expectation over the past few years. Now, when you're looking at volumes are a function of nickel in concentrate. Concentrate is what they mine, and then they process the ore. So what you then get from the ore is now what you call a nickel in concentrate. So this volume now went down, and this is a function of head grade. So if you can mine a bigger size of nickel or a bigger size of nickel ore, whereas from that quantum you only get a certain degree of the in concentrate. So the in concentrate in this case was coming down in value terms or in grade terms. So that's what you then record as your volume. So volumes actually came off year on year. So we are finding Bindura producing on the Trojan mine, which is now which is not churning out high-grade ore, which is now impacting on volumes as well. So on the net, we find just a marginal growth on the top line. Getting to gross profit, of course, the GP levels were down. They alluded that to an increase in costs. They said that suppliers had to hike their prices right at close to the end of the dollarization period, and that obviously impacted their costs in the market. But they're now beginning to see prices retrace to normal levels, and they expect those cost of sales to possibly come off to levels that are possibly close to last year levels and so forth. And at operating levels, we saw the operating profit line going up. Why? This was mainly an implication of exchange rate gains. The exchange rate gains were measured as around 16 million. And when asked about where this money emanated from, they said these are mainly what do you call it? Amounts that are due to creditors from Bindura. So if you had a certain debt that you were supposed to pay in USD and is now priced in RTGS, it means you have gained by the exchange rate. So this is what they have now accounted for as 16 million according to their own explanation. And then getting to the bottom line, it then follows all these the implication of all this growth coming from the exchange rate gain.
Interesting. Now let's talk about, of course, their power situation there. They require 10 megawatts of power on a daily basis, but then if they are operating at full capacity, they require 42. But at the present moment, their demand is 10 megawatts, of which they have been getting just about 5 over the past 1 month or so. I mean, how important is this energy situation?
Yeah, we can no longer overemphasize the criticality of power in the whole production matrix. It's inevitable that producers of repute, such as nickel producers. Nickel is the third largest product by value in terms of export, and therefore it needs to that attention is quite needed. And it's not just for nickel. It's true for gold. It's true for all other minerals. It's true for the whole production lines across the industry. So for BNC specifically, if you are getting 50% of your power requirements, that has got a huge impact in terms of your productivity, even in terms of the value of a produce. It actually raises your costs because you no longer have scale. So I think the deduction is quite simple. The current power shortages are not sustainable for production, and if there is no rectification to this, obviously it might we might see their numbers beginning to fall in production terms as we get into the first half of 2020.
Well, thank you, Respect, for the perspectives. Thank you, viewers, for staying with us. Up next is a look at the stock markets in Markets Daily. Don't go anywhere.
Good evening, ladies and gentlemen. Welcome to Markets Daily on Equity Access. My name is Anis Jimboom, and let's get started. Now, the market was very jittery today with anticipation towards what seems to be a prolonged interim budget review that Mthuli Ncube did postpone today. The market did then take a very huge plunge today, coming off 1.25% on the industrials index, while the all-share index did let up 1.23% for it to settle at 187.12 points. Mining's index did have a very, very marginal increment of about 0.0004% for it to just be about at the same level at 244.58, while the top 10 index as at 1.6 it came off 1.65% for it to settle at 175.98 points. Now, as we continue to slim down those year-to-date gains, we had about 5 counters within that top 10 index that did come off a huge drop by Econet coming off 5.04% for it to settle at 159.91 points. Delta did come off 347, settle at 347.77 cents after having the least movement. Well, the better negative movement among the 5 laggards within the top 10 index after having dropped about 0.07%. Now, cassava is now only 7.7% shy of its year-to-date opening level, where it is settled at 154.13 cents. If we do continue at this rate, I would then predict that cassava may be joining Sitco there in the red zone on a year-to-date basis, maybe by end of week or as the following week does begin. On to our week-to-date move, 5-day trend. The all-share index is down 2.02%, 2.07% on the industrials index, and 2.9% for the top 10 index. 1.65% up for the mining's index. Bindura did mention today, did have an analyst briefing today before we get into our rises and fallers, and they did boast of a 1% increase within their revenues, even though their volumes did come off production-wise 5%, but then within their nickel sales 1% down, but then they were spared by a 16% increase within the average nickel price globally. This did give them a chance to actually enjoy that 1% increment within their revenues. Now they do expect for their nickel price, for the nickel average price to continue going up, with much international news around about electrical vehicles being very demanding of some of the minerals that they do produce, one of which would be lithium as well. So it should improve their numbers, and so if the nickel price does actually come up, it should see them completing their their smelter that has been on 83% completion for quite some time now. Once that smelter is fully completed, then they would start fully producing their products, not just selling out as ores. Now, for our rises and fallers, we did experience a one counter down from yesterday for 23 counters to trade on the stock market, while volumes were very much suppressed today, coming off 42% for there to be only about 7 million shares being exchanged on the stock exchange today. Now, within those 23 counters, we had about 6 rises and 9 laggards. This then coins a third consecutive session where we have had a very negative market breadth, where we have had more laggards than winners today. Willdale did lead the pack of 9 bears today, coming off 5.71%. Econet followed trailing that, letting up 5%, 2.88% down on Padenga. Padenga did mention that they are looking to get into a new business venture that should be also foreign currency earning in the early weeks of the year. They did also mention it coming closer to the AGM, and we all did expect that they were going to announce what kind of business they're going to be getting into. But unfortunately, they did say there were a couple of full stops, commas, and I's to dot for them to actually just try and finalize that deal. But as long as those menial details have not been settled, then that deal is still in limbo, and we do not know where exactly they will be going. Cassava did come off 2.6%, actually capping off this top 5 fallers set, coming off 1.78%. Zimro Holdings did add 5.09%. For Zimplo, Old Mutual, Citgo International Limited, and OK to then only add about 0.5%, 0.45%, 0.35%, and 0.1% within that respective order. Now, for our forex market, the parallel market continues to weaken on a very at a very slow pace. So is the interbank rate, which settled at 9.2, while the parallel market settled at 10.5, and the Old Mutual implied rate was pretty much stable, as the Old Mutual Johannesburg Stock Exchange counter did not make any movements from prior session, after it had dropped about 5% post the High Court actually illegally reinstating the CE, the past CE Peter Moyo. Now, I did talk about Bindra Nickel. One prospect that I'm very worried for them about is the smelter. If we continue in this ZESA strangled situation, they would be very much in deep trouble. Currently, they did mention that they require about 10 to 12 megawatts for their whole plant to be fully functional, and they only have been being load shedded and only getting about 5 megawatts, which is pretty much half of what they've been getting. Now, when the smelter then comes into the picture, they would need a total of 42 megawatts. I wonder what it would be like in the future if we do persist within this kind of conundrum that we're in right here in Zimbabwe. Is the government going to really solve the ZESA issue, or we're going to continue strangling most of the companies that have been crying foul about this situation going forward into the future? Now, don't forget to like, follow, and subscribe our YouTube, Twitter, and Facebook accounts at Equity Access, and do visit our website www.equityaccess.net. Good evening.